Hello, this is Dave Maddock with Maddock Associates, the YouTube video on how about the patient-centered outcomes research fee. During this presentation, we're going to talk about what the PCORI fee is, who needs to pay the fee, how to determine what the fee is, and how to pay the fee. Before we get into that, just a little bit of background on Maddock Associates. If you don't know who we are, we're independent brokers based out of Washington State. We work with businesses all over the country. We have about 40 years of business experience. We're a broker. We work for our clients, and we help them manage employee benefits costs. We help their employees with claims issues, educate employees, and also help with getting the best value for their money. And then finally, compliance, and that's what we're talking about today, staying compliant with a newer law called the PCORI Fee. More information about our company is at maddockinsurance.com. So disclaimer before I start this, Maddock Associates, we're not tax accountants. This presentation is information only, is not considered tax advice. Each company has different facts and circumstances which may not be addressed in this presentation, and make sure to consult your tax accountant with any specific questions, and definitely before filing any tax documents. So getting into this, the PCORI fee, what is it? The ACA, or the Affordable Care Act, created the Patient-Centered Outcomes Research Institute to help patients, clinicians, payers, and the public become informed health decisions by advancing comparative effectiveness research. So essentially it's a somewhat of a think tank research group, and it's being funded by taxes on insurance companies and self-funded insurance plans. The fees are temporary, so the fees apply for the plan years ending on or after October 1st, 2012, and they do not apply to any years ending on or after 2019. So based on the way the law was written, unless they change it sometime in 2020, we won't need to be doing this anymore. But for now, many groups will need to file this fee. The fees are due every year for those who need to pay them July 31st. Who needs to pay the PCORI fee? The PCORI fee applies separately to specified health insurance policies and applicable self-insured health plans, and is based on the average number of lives covered under the policy. Insurance companies pay the PCORI fee for fully insured plans. So if you have a plan that's fully insured, then there's no self-funding to it or claims funds, then you don't generally need to worry about paying the fee on the health plan. The employers that need to pay the fee themselves, that don't have the insurance company pay them, are companies that have self-funded medical plans. So those are generally plans where you're going to get claims information. There'll be some sort of credit or refund if you have good claims. In Washington, if you're a small company, the most popular plans right now are All Savers, John Alden, Starmark, and Cigna. And then larger groups, there's all sorts of different funding arrangements with third-party administrators. So if you're a self-funded plan, also called a RISA plan, then you'll definitely need to be filing these fees or paying for these fees. It comes down to the employer to pay them. Sometimes the third-party administrator will facilitate that for you. Also, groups that need to pay these fees are companies that have HRA, health reimbursement arrangements, or FSAs, flexible spending accounts. So a company that has a fully insured plan but also has either an HRA or an FSA will need to actually pay these fees in addition to their insurance company on the medical plan. A fully insured plan will pay the fees, but then the employer will need to pay the fees for the HRA and or FSA. So getting into determining what the fee is based on the number of members enrolled on the plan when you're filing for a self-insured plan. When you're filing for HRA or FSA, then you can use the number of employees. So it's a little bit confusing here. If you're doing the PCORI fee for a self-funded plan, then you have to look at all the members. So when we talk about members, we're talking about all the covered people, both the employees, spouses, domestic partners, and children. On the HRA or FSA, it's a little bit easier because you only have to pay for the covered employees. So whether an employee is single or has 5 family members on the plan, you just be paying per employee on the HRA or FSA. The simplest way to determine the member count is called the snapshot method. So actually the IRS allows 3 different ways to count the number of employees in your organization. but I'll just focus on one for simplicity, and the snapshot one. So the snapshot method, the way that works is you basically pick a date in a quarter, so maybe like the first Monday of each quarter or the first payroll of each quarter, and then you calculate the employee or member or employee count for each of those quarters using that same date. So if you're going to use the first day of the quarter, then every first day of the quarter you'd count that, and then the PCORI fee is based on the average count throughout the year. A tip is you can use your medical insurance billing statement to help determine the member count, particularly for people that have a HRA that helps pay for part of the major medical deductible. Then generally only people on the HRA are people on your medical insurance plan, so you could just use your medical insurance bills, look at the employee count there, and that would give you the numbers for this. If you have a self-funded plan, then you're actually going to have to count the number of members, and usually your third-party administrator or whoever's administering the self-funded plan will be able to give you a report that will give you the employee or member count. So here's an example for a self-funded group plan that runs July 1 through June 30th. So this group said decided they're going to use the first day of the quarter. So July 1, they had 80 members, October 1, 88 members, January 1, 92 members, April 1, 90 members. So what they do is they just add up those 4 quarters, divided by 4, and 88, that's their member count using the snapshot method. So determining the actual fee, the fee uses a October 1 through September 30th year. So they're always looking at when your plan year is ending. So for this time frame, people who would be paying $2.08 per member or employee if you're an HRA per year for plan years ending on or after October 1st, 2014 through and before October 1st, 2015. If you're paying for a plan for ending October 1, 2015 through October 1, 2016, then you're going to be paying the $2.17 per member year. If you started a self-funded or HRA plan November 1, 2015 or later, you would not be paying the fee this year. You would be paying it next year because your plan would end after this October 1, 2016. The fees for future years are still to be determined. The fee goes up every year based on an inflation calculation that the IRS has. So paying the fee. You pay the fee using a form, an IRS form called 720. So when the PCORI fee came out, they didn't create a form just to pay the IRS the PCORI fee. They used an existing form, the IRS form 720, and they just added a PCORI fee into that form. So when you look at that form, you're going to see all sorts of different types of taxes that could be paid, different gas taxes, different, all sorts of different taxes are in there, bow and arrow taxes and so forth. So generally what you do is you go down to line part 2, line 133, and what you're going to be doing is going under the patient-centered outcome research fee, and you're going to indicate how many lives are there, and then you're going to put in the fee, and then you're going to calculate the tax. So for employer groups, they're going to be using the applicable self-insured health plans, either for the self-funded plan or the HRA. And then they just, the form is pretty self-explanatory. An example here was our plan ending June 30th, 2014. This was a year ago when the fee was only $2. They would just take the snapshot method times the fee, and then that would give them the tax due. So the 720, Form 720 is a quarterly form, but if you're using it just to pay the PCORI fee, then you only file it once a year. The due date is July 31st each year, but when you look at the instructions, it says you're actually paying for the second quarter. So at the top of the form, it asks which quarter it is for, you would use quarter ending June 30th of that whatever year you're filing, and it's due the end of July. We would strongly recommend that you work with your accountant to verify the information on your Form 720 is correct. As this is a tax document, it's important to have your tax accountant take a look at it. Any questions? We're here for you. Maddock Associates, phone number 800-875-4490. Hope you found this video useful and helpful, and we're here to help you out. Thank you.